the South African economy grew better than expected in the second quarter, according to the BankservAfrica Economic Transactions Index for June. That, coupled with the unchanged interest rates just announced, as well as lower stages of power cuts in recent weeks, have all raised hopes that maybe the South African economy may be bouncing back. For more on this, let's speak to Dr. Azar Jammine, who's an economist joining us here on News at Prime. A very good evening to you, Doctor. Grateful for your time. As always, how should we interpret these different sets of data related to our economy at the moment?
The way we should interpret it is that the economy is not doing quite as badly as we were fearing it would, mainly because of a reduction in the intensity of load shedding compared with what we had anticipated. A few months ago, when we were experiencing stages 6 and even 7 at some point in time, we were looking forward to the midwinter season when the demand for electricity picks up sharply, and believing that we by now would be in stage 8 or even worse, and there were some even talking about a total grid blackout. And that hasn't actually transpired. So as a consequence, we are seeing a little more economic activity than we expected. Also, inflation has been falling more steeply than we anticipated, largely because the dissipation of the intensity of load shedding has allowed food price increases to slow somewhat. Also, fuel prices have fallen, whereas a year ago they had increased very sharply at the same time. But the combination of falling inflation and lower fuel prices has allowed and above that, the rand itself has recovered around 10% of its value against the dollar, from nearly 20 rand to the dollar to below 18 rand to the dollar currently. And that means import prices don't have to rise quite as sharply as previously anticipated. And that paved the way for the Reserve Bank to leave interest rates unchanged, whereas until recently one had expected interest rates would have to be increased still further. So the combination of all these things has resulted in the economy doing a little better. Your terminology of bouncing back, I think, though, is an overstatement.
So
there's no way the economy it has not bounced back. It has just not slid a lot further than as much as we had anticipated.
And just on the issue of language, in fact, let me ask you this question. When it comes to our analysis, the anticipation of what lies ahead in terms of economic performance in South Africa, I wonder how much of it is actually based on forecasting, genuine forecasting, and perhaps pessimism built on previous disappointments.
I would like to suggest that it's more on forecasting. A lot will depend on how we succeed in tempering load shedding. If we, right now, of course, we've moved on to higher stages of load shedding, but that's not entirely surprising given the acute cold weather that we've had for a short period of time. One would hope that that will start dissipating a little. And if that is the case and we end up with lower levels of load shedding than we anticipated, then these benefits, it's a vicious circle. Less load shedding than anticipated implies slightly higher economic growth, which in turn helps the rand investors to want to invest a little more into the country. And that in turn means lower inflation. And that in turn means no need to raise interest rates as much as previously. It also means that government revenues won't slow down as much as anticipated. But there are, as the Reserve Bank governor suggested, a huge number of risks. The one is, can we be sure that load shedding will remain at lower levels than we previously thought? Secondly, on the food price front, there's this. Russia has terminated the Black Sea grain agreement, allowing Ukrainian food commodities to be exported freely. That has already resulted in wheat prices rising by over 10%. If those new higher prices are sustained, that means that your inflation rate will not recede as much as we have been hoping more recently, and the Reserve Bank may well have to increase interest rates further. Thirdly, on the fiscal front, will government be able to limit its expenditure to levels that don't allow the budget deficit and the public debt levels to rise very sharply. And then finally, a lot depends on the global economy. At present, it looks okay, but one fears that we haven't seen the full effects of the sharp rise in interest rates that has taken place in order to fight off inflation that we've seen.
And when you say we need to look at the broader global picture, and you mentioned interest rates, some of the criticism around the Reserve Bank or the MPC has been that it is merely following international trends. So when, for example, the Americans were in a consecutive hike cycle, so were we. When there was a sort of holdback on increasing rates most recently, the MPC did the same. Are we simply following global trends? How much movement is South Africa actually able to do outside of what the rest of the world is doing?
The answer is yes and no. The fact is that we did start raising interest rates before the Americans actually did. So we have not allowed inflationary pressures to build up to the extent that the Americans did. They had a peak inflation rate of 9.1%. We never got quite that high either. But we have to be cognizant of what happens overseas, because one of the critical determinants of the extent to which foreigners are willing to buy South African bonds and put their money into rand deposits is how do our interest rates compare with those abroad in America or Europe. And if they carry on raising interest rates and we don't, that reduces the differential between our interest rates and theirs and reduces the attraction for foreign investors to actually put money into South Africa. And that in turn results in a weaker rand, higher inflation, and the thing can get out of hand. So the Reserve Bank has to take cognizance of what happens overseas. But it professes not to be slavishly following what happens overseas. And possibly this week is a case in point. Last week, the MPC held the rates steady. This week, there's an expectation that the U.S. Federal Reserve Board will raise its interest rates by 0.25%, and the Europeans will follow suit. Right. So we're not following exactly what's happening overseas.
And lastly then, Dr. Jammine, the issue of the power cuts, load shedding, you've raised it as still a major economic concern. How big of a concern is the fact that as things stand, we don't actually have an actual date for when we'll see a more longer-term cooling of the intensity of the power cuts, or even when they will actually end, despite that there's a minister who's now been appointed to fill that role and oversee the process specifically?
Of course, it's fairly depressing. I mean, that we haven't got a particular date. It simply makes the outlook that much less certain than we would like to have seen. And to that extent, it contributes towards less investment than would otherwise have taken place. But, a lot of information has been coming through suggesting that little by little we may be getting on top of the power generation program. Funnily enough, what people should be concentrating more on in the longer term is whether, as we start opening up renewable energy projects in the Northern Cape and Eastern Cape, whether we will have sufficient transmission capability to bring that electricity back to the hinterland. And this is another very big challenge. Experts have been telling me the generation of power is no longer going to be as serious as it has been, but the real challenge will we be able to transmit that electricity to where we want to do so, because we are totally unprepared. Most of the transmission facilities have been geared towards coal-fired power stations in Mpumalanga and KZN, transporting electricity to other parts of the country. Now we're going to have to see the reverse taking place from the other parts of the country back into the hinterland.
Dr. Azar Jammine, good to speak to you as always.